and welcome to this TIOmarkets webinar on trading strategies. We just wanted to briefly touch on today how to formulate a trading strategy, and then I wanted to highlight one very simple one which I've used many times over almost 30 years of trading, which I think would be it'd be beneficial to any trader, but I think it beneficial to certainly the most junior of traders, people who don't have a lot of experience, as it doesn't really require a great deal of analysis. So we'll come to that in a bit. But first of all, how do we formulate a trading strategy? First thing I'm going to say is, as a trader, the last thing you want to do is have a position just for the sake of having a position. If you don't have a view, you don't have an idea, don't trade. Leave it alone until you do. Just merely having risk without having a view, without having a thought around why you've got a position is not a good thing. So always have a strategy. My phrase is plan your trade, trade your plan. And I think that's a good lesson to adhere to. So how do we formulate a strategy? Traders invariably will fall into one of two camps. They're going to be technical traders, or they're going to be fundamental traders. Technical traders are going to spend most of their time looking purely at charts. They're going to be looking for technical indicators, technical formations, lines of support, resistance, trend lines, specific formations like double tops and triple bottoms and all those sort of wonderful things. They're going to be looking at particular indicators, overbought, oversold conditions, relative strength indexes, MACDs, all those sort of things, all of which are going to allow them to formulate a view, but purely based on the technicals that they're looking at. The flip side of that is a fundamental trader. The fundamental trader is largely going to ignore technical analysis, and they're going to work off the economic fundamentals of the two countries that they're looking at. So if they're looking at the US dollar against the Japanese yen, they're going to be looking very closely at the recent data releases from the US and from Japan, and analyzing that to see whose economy is stronger than the others, and formulating a view and a position based on that. And then you do, and I think this is something which we do see a lot of. Certainly, you would see a lot in the in the hedge fund community that are probably looking at longer term trades, is where you get a combination of fundamental and technical analysis. So you'll see a portfolio manager, for example, will formulate a view based off fundamentals, but then will want to turn to technical analysis to decide where exactly to get into a trade and where to get out of a trade. Both when they're wrong and also when they're right too, where to take profit on a trade. So that's particularly common. So those are the ways to form a trading strategy. As I said, most traders usually fall into one camp or another. The second important thing to think about, regardless of whether you're looking at technical or fundamentals, is your time frame on a trade. You especially when you're looking at technical analysis, if you're looking at putting on a short-term trade, and as a trader you're not going to run that position for more than maybe a few minutes or maybe an hour at the most, don't go looking at a daily chart to go and form a view. It's probably not going to tell you very much. Similarly, if you're looking at more of a macro view on a position, and you're taking, maybe you are backing up a fundamental view with some technical analysis, and you're looking to run it for, a month or maybe even 3 months or something like that. Don't go looking at a 5-minute chart. Again, that's not going to help you. Look at a daily chart, look at a weekly chart, look at something that's going to cover the time frame you're looking at appropriately. So, those are just a couple of ways of starting to put a trading strategy together. And obviously, as a trader, you will decide, what works best for you. So the one thing I wanted to look at, and again, as I said, this is a very, very simple strategy, and it's not Doesn't really involve a great deal of analysis. I'm just bringing up my my MT5 here, my MT5 demo, just to show you. So this doesn't really involve looking at any particular charts. What I will draw your attention to is just simply the market watch box up in the top left-hand corner here. So yeah, market watch just basically lists the currencies, commodities, etc. that you're looking to trade, where they're currently trading, and most importantly for this particular exercise, where they have traded. So you can see the high and the low on the day. And what I like to look for is, on a day where there's been some good momentum in one particular direction, but that momentum has changed. So what do I mean by that? That means if something has moved down on the day, but then it stopped, it started to move back up a little bit. Or something has moved up on the day, but it stopped and it started to move down a little bit. Just, looking to see, okay, well, the momentum has stopped. Why has that happened? Maybe there's some buy orders here or there's some sell orders there, and look to trade against those highs and those lows on the day. So to give you an example, I'm going to pick something here. I'm going to pick the Australian dollar. Okay, so we've got the Australian dollar here. I've just highlighted it. See, it's currently trading around 0.6945. It's had a low of 0.6940, so we're about 5 points off the low of the day, and we have had a high of, well, it's actually 70 cents. So about 5 points off the low, 55 points off the high of the day. We've hit 40 and we've just bounced a little bit here.